So are you an investor or are you a trader? Here's why you should do both. Hey, what's up guys, Dan Trivedi here, I hope you're well. In this video, I'm going to talk to you about trading and investing and the difference between the two, and then the secret to why you should consider both and how you can go about implementing the two strategies in one deal. Before we get started, you are probably wondering where my video is titled Predictions of 2021. Because every YouTuber, and especially every property and investment guru, is doing the same videos. And one of the reasons why I haven't uploaded it yet is because, look, no one really knows if the market is going to go up or down, left to right, sideways. There's so many fundamentals that can affect the market that just haven't been concreted yet. And if I'm being honest with you, I've seen so many videos and so many different people publishing about their predictions of 2021. It kind of is a little bit the same old, same old. So it kind of got me thinking, look, if someone asked me what to focus on, what can I do if a property deal comes up, or I want to get started in property investing in 2021 to make sure that it is successful. Control the controllables, because there's so many fundamentals that you can't control. And this is why I'm going to talk to you about trading and investing. And then right at the end, I'm going to talk about how you can amalgamate the two together and why you should on every single deal. Now let's start with trading properties, which is like trading anything. You can trade anything right through from a car boot sale, buying and selling, through to kitchens, tiles, stocks and shares, Forex trading, cryptocurrency and property. And it all very much involves the same thing. Buying something low, selling it high. Or if you're a really bad trader, you buy it high and you sell it cheap. And unfortunately, there's a lot more people who do the latter than there does the former. Because there is a lot of hype, a lot of rubbish over the internet, and a lot of get-rich-quick schemes that focuses on some form of trading. If you take cryptocurrency at the moment, it is absolutely booming, and there's people who are jumping on the bandwagon at the absolute peak of its historical life. And really, you're taking a huge risk on it continuing to go up, but when it does drop, are you the type of person who will potentially sell? And there's nothing wrong with taking risks, but calculated, educated risks are part and parcel of trading and investing. But just taking risks because everyone is doing it is not what this is all about. So in property, trading can be one of many things. You can buy something cheap on the open market and you can flip it straight away without touching it. You can do a minor refurb and sell it for more money. If you've added value, you can buy a piece of land, build new houses and flip them on and trade them. Anything that involves with the intention of buying and selling is considered a trade, which is actually not just really relevant for what we're talking about, but it's relevant for so many other things, tax, company structures. So it's really important that you understand the difference between trading and investing, and more importantly, what you're going to be doing at the start of that property. Then flipping over to investing, this is really something where you buy it to hold on to, not necessarily making a profit, because investing can be profitable and it can be loss-making just like trading. So that is a really quick, no frills overview of the difference between trading and investing. And the two are very similar in some ways, but also completely different in terms of how you materialize profit and tax. Here's one of the main reasons why you're not seeing a bog standard prediction of 2021 from me. And I'm going to give you something which is far more real and has far more substance behind it. Because if you want to get involved in property, or you already are and you're waiting to make your move in 2021, but you're waiting to see what happens, well, regardless of what happens in the market, what happens to legislation, what happens to mortgages and lending, if you follow, which has effectively been my ethos for years, then you shouldn't go too far adrift from making it a success. And this is why you should invest like a trader. So what does that mean? In a nutshell, that means I personally look at a deal. The first thing I look at is, am I buying it significantly below market value? And I don't mean, am I getting it cheaper than what it would sell for on the open market? I mean, am I paying a reduced price for the value that I can create? And that is actually quite different. Don't get me wrong, if you can see something on the market and it's 150 and you can get it for 100,000, that's significantly below market value, and that's quite simple. The reason why I look at this is very, very simple. I started with zero money and I invest as if I am on my last penny. That means that I am trying to make the most of my cash pot that I do have, with the expectation that I might not have any more coming in, or I'm not relying on other refinances or sales to continue to be able to invest and buy property. So I'm investing with a head that tries to absolutely maximize the return on the money that I have. And I mentioned this in last week's video. And looking at every deal like a trader, even though my intention is to hold on to it long term, means I have more opportunity or a better chance of getting my money out of that deal. Let me give you an example. If you're a standard buy-to-let retail investor, the people that I would potentially sell a deal to on the open market, you may be looking for a property which is nice. Maybe you would want to live there yourself. It may already have been refurbished or built and developed, and it's already got tenants in. So you want to buy it and you instantly get an income and your money is locked in, but you're happy with the return that you're getting on that money that's locked in. You're not looking to do anything else with that property. You're not looking for the opportunity. You're not looking for the angle on that deal to do more with it. That is what I consider a standard retail investor. A trader has no interest in that type of deal. They can't buy that on the open market. They can't buy that property at the open market value. And there is no margin to be made, or very, very little. And time you take in costs of stamp duty, you're probably going to make a loss. So they need to look at deals differently. They need to look at where the angle is. They need to know where their profit may be coming from. So they would look at that deal before it's been converted, before it's been refurbed, before it's been built. So they would potentially look at the same type of house that you would be buying as a retail investor, which is say 300,000 because it's already been done and it's producing 2,000, 3,000 pound per month income. And then they would look at the house before it had all the work done. Let's say it's 200,000. They would look at the cost to buy it, the cost to refurbish it, and then how long it will take to do that work. And then once they've got it finished, they can sell it on the open market, the open market at the price the investor is paying. And it's that trading view on the deal which separates a trader to an investor. And then it's very similar. Some people work for money. A trader is working for money. They're buying and they're selling. They're exchanging their time for the money that they get at the end of it, albeit a lot more in some cases than you would, say, a standard job or a business. An investor is making their money work for them. So they are literally putting their money into a deal and they're working out what their net return on investment is on that money left in the deal. And where I come in, or where an entrepreneur or an experienced investor would come in, is you kind of want your cake and eating it. You kind of want to look at it and you want to do both. So I want to buy the deal that the trader is buying, but I also want the investment the investor is getting. And I want to get my money out of the deal like a trader so I can buy more properties. So I want everything and more. I kind of am the greedy investor in this example. And it's okay to be a little bit greedy if that's what you're being called, because this is how you're going to make small pots of cash go further. And if you're like me, want to rely on the income that's coming in from your rental property or property sales or other refinances, you want the maximum return for every single penny in your bank account. This is why you should invest like a trader. You need to look at every deal as if you are trading it, but you're buying it actually for a long-term view. And I've said this countless times. Buy for the long term, take short-term wins. But I don't mean sell the property. Get it refinanced, take that money out tax-free. So in the same example for the rental property, I'm going to buy it, but I'm going to buy it pre-refurb. I don't mind getting my hands dirty, or my builder's hands dirty, should we say. And I don't mind making the investment, doing the work, spending the time, getting the property right, and then getting it rented. But instead of holding on to it, I'm going to refinance that property at the increased value, because I know I've made money. I've increased the value enough to extract funds out. That then gives me money to go and do the same thing again. Now, I'm not saying don't ever sell. At the moment, I've got a property on the market which is about 20% above market value, my market value, because the market is dictating that things are massively moving upwards quickly. And I'll never get that value from a surveyor on a refinance. So I might be able to capitalize on the masses' appetite to buy properties at overinflated prices because they want that end result. They want that property that's finished and rented, producing an income from day one. If you can follow the ethos of investing like a trader and you look at every single deal as it should be, which is to make money short term, if you had to sell it, but you don't sell it and you refinance it and you switch that over to your investment side so it produces an income, you are actually getting a return on no money. Your return on investment is infinite because you've taken all of that money out. And that is how you can turn your 2021, regardless of what the predictions, regardless of what happens in the market, regardless of what happens in the legislation and from the government, into a successful year. You can trade your way out of a pandemic type of market into a hugely successful year. And like I said on a couple of videos ago, you can measure your whole 2021 by the equity that you create in those deals after you've refinanced out. And you can also measure by the cash flow that you're creating every time you do one of these deals. And that would be one of my biggest bits of advice to anyone who is getting involved or starting again or active in the market right now for 2021. Forget the bullshit, forget the YouTubers, forget the gurus about the predictions of the 2021. It's all a load of BS. No one really knows what's going to happen. And even if they do know what's going to happen at a national level, it's going to affect individuals differently at local level and in your local stomping ground. So take what I've said, invest like a trader, hit the ground running, get active, get investing, get buying. Hope you found the content rich, and I'll catch you all in the next video.